Friends, today we're taking a look at Mastercard Incorporated, ticker symbol MA. We'll be looking at the last 5 years performance of the stock, just like we always do. Then we'll look at the latest earnings report. We'll look at some of the outlooks that they have for the next 2 years, 2 to 3 years, and then we'll be looking at the fundamentals, the performance of the fundamental stock, and we'll try to find a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Mastercard is one of those companies, just like Visa, the last video that we talked about, that a lot of people love. It's a growing company, and I think it's a great company to look at having in your portfolio. In the last 5 days, it has grown 2.3%. The last month, 4.8%. And year to date is up almost 25%. And in the last 5 years, 82.7%. If you compare it with Visa, Mastercard has been, the stock has been expanding and growing a little faster than Visa. And part of that is because Visa is bigger than Mastercard. But they're still, both of them are I believe, a strong money-making machine. Analysts believe that it is a strong buy right now. The price target that they have is of somewhere between 552 to 560 in other places I've seen it. Like I said, they reported earnings back in October 31st, and they will be also reporting the fourth quarter results and full year in the last week of January. They are trading right now a little higher than Visa. They're trading at 40 times PE, but you will see why. I think it has to do with the growth that they are experiencing. Sometimes some of us look at PE as to kind of find out how expensive it is or how cheap it is, but sometimes that's not the best way to look at. Also, some of us like to look at the forward PE, and at forward PE right now, it's close to 34. A rule of thumb when it comes to PEs, my understanding is you kind of double what you're expected to for the company to growth. So let's say that you think that Visa will be growing at 16% a year times 2. So a fair PE value, some people will say, is 32 times earnings. So they're paying a dividend of $2.64 a year, which is about 0.5% at current prices. Mastercard is one of those companies that I own. I am going through all the companies that I own. I bought Mastercard at $445.45 at average of all my shares. Mastercard is about 5% of my stock portfolio, and as of right now, it's I've made almost 20% on that stock. So I'm pretty happy with it. I always try to look for about a 15% return on anything that I invest in. Mastercard last return. Oh, before I go into the last earnings, just want to encourage you to subscribe, to leave a like, leave a comment. Do you own Mastercard? Do you? What are some things that you agree with me or disagree with me? And also, just letting you know, I am going through all the 14 stocks that I own as of right now. And once I'm done with them, I will be taking suggestions from you guys. So if you want to leave a suggestion down in the comments, just let me know. and let me know how I'm doing. I know I tend to just have a conversational kind of video with you guys. It's just like if we were in the same room and talking. So I know for some of you guys that might be boring. I hope that it's not. And just let me know if you like it. If you don't, well, I'm sorry. Anyway, earnings last time that they reported, they beat on normalized EPS at $3.89. They reported, and GAAP they missed at $3.53, and they beat in revenue at $100 million, which is not too much from the $9.3 billion that they made in revenue, which I find it interesting because I just finished recording Visa, which you probably, it's already online, you can see it, and just the numbers are in my head. So Visa made $9.6 billion, I believe, in the quarter, and Mastercard made $7.34 billion. So when it comes to revenue, they're pretty close. Mastercard continues to grow, and that's pretty good. They're expecting to report $3.71 and about $7.4 billion in revenue. Now, the interesting thing is that revisions, when it comes to Mastercard, they have 17 up and 5 down. And if I remember well, I think for Visa, it was like 3 up and 14 down. So that is something that I will definitely encourage you to look into if that is something that you care about, what the analysts think about. I normally like to listen to them, but I don't pay too much attention to what they say. Mastercard just had a investment community meeting that was on November 13, and in their presentation, they were talking about the 2025-2026 performance objectives. Now, these are objectives; these are not guidance or anything like that. But I love what I'm seeing here. They are their goal is to have a net revenue grow of high end of the low double digit. So high end of the low double digits. Low double digits will be between 10 to 15. So high end should be somewhere around 13 to 14%. They're looking for the annual operating margins to be 15%. Great. And the EPS CAGR grow in the mid-teens, somewhere between 15 to 16%, 14, 15, 16. So that's it's pretty nice because I am looking for my money to grow about a 15%. And EPS grows about 15%, even if there is not a PE expansion, that should give me about the growth that I want in my money. But that's just my thoughts. I just want to let you know I am not a financial advisor. Anything that I say here is just for educational purposes. Even whenever we start talking about possible fair value, just understand that you should do your own due diligence, and I am not recommending any of these stocks. I'm just wanting to learn not only by talking to you, but also learning from you. Just let me know where I may be wrong. So with that said, let's just go back and look at the past performance. So when it comes to revenue, they have been growing in the last 10 years close to 14%. In the last 5 years, slowed down a little bit, especially because of COVID. There was a little dip around COVID. They have grown at 12%. When it comes to earnings have been growing at 15.6% in the last 10 years. And in the last 5 years, once again, it just kind of slowed down to about 11%. And partly that has to do with a little bit of the dip of COVID, I think. When it comes to free cash flow has been growing in the last 10 years at 19, almost close to 19%. And in the last 5 years, 14%. I do not worry about a lot of these slowdowns on the last 5 years because Mastercard is getting really big. They still have some room to grow. They talked in the presentation about different countries in which they could they're trying to get into. but they're big, and it's a little bit hard to get in. When it comes to the free cash flow yield average, it's 2.6%, which is pretty good. Book value, it's last 10 years at 3%, last 5 years at 6%. Return on equity of 141%. That is crazy numbers. Return on invested capital, 36%, crazy numbers. And return on asset at 20% is also really, really high, pretty good. When it comes to dividend growth, in the last 10 years, they have grown almost 20% CAGR, and in the last 5 years, at 14%, 13.7%. This is great. Payout is at 21. This is one of the reasons why Visa and Mastercard are some of those companies that a lot of people love for the dividend investment. Not only because you have some growth in there, but you also have a grow of dividend. So this is one of the many reasons why I am probably going to be continue to hold on Visa and Mastercard, and I may even be looking at adding. Long-term debt, they have been growing their debt. Of course, they're updating a lot of things, and that is normal. But what I like about it is that their debt related to their free cash flow average, it's at almost 2 years. So meaning with their free cash flow average, they could pay their long-term debt in less than 2 years. I normally look for this number to be under 5, so that's pretty good. Outstanding shares in the last 10 years have been dropping at 2.2%, which is good. In the last 5 years, 1.8%. So those are really good numbers. I love all of these finances. I don't see any issues. But once again, remember, I'm not a financial advisor. Now, let's look at some valuation. When we look at the historical multiple valuation, I will probably be, because of the growth that they have, I will be focusing more on the trailing 12 months. And if we take all the different per share numbers and multiply it by the average multiples in the last 5 years, we have a fair value of close to $500. However, when it comes to the revenue base, if we we continue to see growth in the revenue, let's say at 10%, we take the profit margin and the buyback we reduce the shares the same way that they have been buying back in the last 5 years. We come up with a future EPS of 22.7. We multiply by a future PE of 40, so just kind of where it is right now. And then we add the growth of the dividend and the dividend that we will be getting. That will give us a $930 price for the stock in 5 years. Whenever we divide it by 2, in order to get a nice 15% discounted. That will give us a fair price based on revenue or $465. When it comes to discounted earning valuation, growing it at 16%, close to what they were expecting, with a PE of 40, it gives us a fair value of $555. Payback time at 16% growth of the free cash flow gives us a 512 fair value. Discounted free cash flow valuation, if we were to grow it at 16% and then discount it at 15%, it gives us a fair value today at $680 per share. Owner's valuation, this is the one that Warren Buffett came up with in one of the books that I read. It gives us a number of $670 fair value. Whenever we take all of them and look at the average of all of those valuations to kind of see a midpoint, trailing 12 months, it gives us a $564 as a possible number, a fair value, which is close to the number that the analysts are thinking. So now, if you wanted to get a 15% margin of safety, and a good price to a fair value will be somewhere around 480. But if you just want a 10% margin of safety because you like Mastercard, that will give you about a $510 as an entry price. Now, a lot of you guys sometimes tell me that my numbers are really low. And part of the reason, remember, is that my valuation always is discounted at 15%. So with that said, I hope that you enjoyed the video. Don't forget to subscribe and to leave a like. Leave a comment. Let me know what I may have missed with Mastercard and what are some other things that you're excited about this company. I really think that this is a good company to have. Once again, do your own due diligence, and I hope to see you in the next video. Have a good time.